There's no shortage of volatility in the forex market. I guess the first question would be, how do you trade volatility?
Well, I've always been an advocate of keeping things simple and going with the basics. It doesn't matter what you're trading, whether in high volatility or just looking to buy and hold. I think the same fundamental issues remain. Obviously, risk management, everyone always bangs on about risk management, but it is the most important thing out there. Using what the company you're trading with has there to protect you. They're there for a reason, so using them is really important. So using stops, using limit orders are fantastic ways just to make sure you're not going to blow your account up in the end. But of course, when we're looking at volatility, the whole point of it is, okay, it's fantastic when it happens. It gives you so many more opportunities to trade, make money off the back of what you're doing. But of course, it also increases the risks. The big moves don't just go the way you want them to, unfortunately, they go both ways. So making sure that when you are trading, you are protected is number one, I think, is in the trader's book as the number one thing to do. Make sure you're protected when you do those trades, because when volatility is there, it's the most important point.
The dollar seems to be an eternal safe haven, but what other currencies might you favour in a volatile market?
Well, the dollar, of course, has had its problems. We've got basically global economic recovery issues around the world, and the big talking point around the dollar has been, is it still that big safe haven currency? Will it hold on to the reserve currency side, and will it lose its AAA rating? And of course, the big stories there are the dollar isn't the only currency to look at. Now, you can look all over the world. You usually look, in terms of safe havens, it's those commodity-based currencies usually do well. Of course, during times when in economic strife, you get commodities usually perform pretty well. We've seen that in the likes of oil, a lot of metals prices as well. So the likes of the New Zealand dollar, the Australian dollar, both very heavily weighted in commodities and can act as real good safe havens because of their reliance on the commodity market.
So what mistakes do traders typically make in a market like this?
It really takes us maybe back to the first question, and it's not placing those risk management tools there. When you've got volatility like this, and of course we've really seen volatility the way it's been since 2008, since the global crisis. Okay, things have calmed down a little bit, but not necessarily by that much. We've still got major stories which aren't just front page business news, they're front page news. So that's giving us enormous amounts of volatility. And when it's so uncertain, the market gets very worried. There's no real direction to the market at all. So it can be a pretty tricky place to be. So not placing those risk management tools, those stops, those limits, are the biggest problem that people face.
At Alpari, you favour using a relative strength index. What is it and how can traders use it?
Well, an RSI, as it's called, Relative Strength Index, it's a very basic oscillator when it comes to technical analysis. Technical analysis is one of those subjects where a lot of traders tend to bury their head in the sand, especially then with you put it with foreign exchange. But it doesn't have to be that difficult. An RSI basically is an overbought and an oversold indicator. It has two levels. It has a 70% level, it has a 30% level. If the market goes above that 70% level, it's saying that the market's gone too far, too quickly, and is likely to correct. And exactly the same thing on the downside. Goes below 30, it's looking to push its way back up again. And it's all well and good in a volatile market. When the market's very choppy, it gives you a lot of good signs. But when the market starts to trend, it's not always as useful, which is exactly the same with all forms of technical analysis. They work well in some markets, but not as well in others.
Looking in more depth at your business, Alpari has been recognised as a fast-growing FX provider. What's the key to attracting clients and then keeping them with you?
I think it's innovation at Alpari. I mean, what we look to do is give clients choice, and a choice through technology. We offer around 8 trading platforms now. So we really give clients a choice of the account and the sort of service they want to receive. We know that not every client wants to be bombarded every day with ways to trade and asking if your account's okay, but some people do want that. Some people need the helping hands, some people don't. So we like to give clients that choice, and the fact that we have, of course, the award-winning MT4 platform is a massive plus point for Alpari. So it's really that innovation and looking towards technology and giving those clients the choice.
So finally, what are the watchwords that people should trade by over the coming year? Likely to be another volatile year.
Of course, the big words to use are, I mean, you don't want to say Greece is the word, but we are saying Greece is the word. Of course, you have to look at those big stories happening in the Eurozone. But It does bring the volatility, and that's what we want. We can't always say that the big news stories are bad news or good news. They will make the markets move, and as traders, that's what we want. We want the markets to move in order to get those trading opportunities. So those news headlines are there, but they're not always good and bad news. They are just opportunities.
James Hughes, thank you very much.
Thank you very much.